Hello everyone, how are you all? Everyone fine? I hope everyone is doing great. Today in this video we'll discuss the mock test paper which was conducted by ICI on 9 September 2024 for CA Final Financial Reporting paper for November 2024 exam. We'll discuss the entire case study for multiple choice question which was asked in this particular mock test paper, and also we'll discuss the newly added question in the descriptive part. For other questions which are repeated, we'll not do the discussion because for that you already know the explanation. Can we start a discussion? But before we start a discussion, if you are new to this particular channel, don't forget to subscribe this channel. Don't forget to like this video and share this video with your friend. Let us start a discussion. So we'll first start with the case study, case scenario based multiple choice question. Okay, come to case scenario 1. What is given? Yes. A Limited is a diversified business group operating in multiple business segments across different parts of the world. It maintains its books of account and publishes its annual financial statement under Indian accounting standard. The finance team has been working on closing the books of account and generating financial statement for the year ended 31st March 2002 and are facing issues in the following transaction while finalization of financial statement. The first para, the whatever the opening para is given is not relevant, but then also always read the opening para because sometimes some hidden information is given in opening para also. Got this point? Yes, sir. Come to point number 1. A Limited own 250 ordinary shares in X Limited, an unquoted company, means unlisted company. X Limited has a total share capital of 5,000 shares with a nominal value of rupees 10. X Limited after tax maintainable profit, means profit after tax which can be maintained in future, are estimated at rupees 70,000 per year. An appropriate price earning ratio determined from published industry data is 15 before lack of marketability adjustment. From this para, I hope you have understood this is a question of fair value measurement of the equity shares of X Limited. We need to find out the fair value of investment held by A Limited in the equity shares of X Limited. A Limited management estimate that the discount for the lack of marketability of X Limited shares and the restriction on their transfer is 20%. Of course, whenever there is a restriction on transfer, the value of shares will be reduced. So for that, discount is given 20%. A Limited value is holding in X Limited share based on earning. So in this question, if you see, they have given price earning ratio. The price earning ratio P by E is equal to how much? 15. And we can find out price if you multiply 15 with earning is given profit after tax, maintainable profit is given 70,000. So 15 into 70,000, how much? It is coming 15 into 70,000, which is coming 10 lakh 50,000. So it is coming 10 lakh 50,000. The total value of shares become 10 lakh 50,000 divided by 5,000 you'll do. So that is coming 210. So divide by 5,000, the total number of shares will divide. It is coming 210. But this will this will give the discount factor. We'll apply the discount factor of 20%. So we'll do minus 20%, minus 20%. So minus 20% will do. So it is coming 168. And how many shares held by A Limited? That is 250. So into 250 will do, into 250, that is coming 42,000. The value of investment will be how much? 42,000. This can be one of the multiple choice question. We'll read the multiple choice question at the end. First I am just giving the explanation of the para. Okay sir? Yes sir. Come to point number 2. A Limited has a telecom segment. It entered into an agreement with B Limited, which is engaged in the generation and supply of power. So there are two companies. A Limited is engaged in telecom sector and B Limited is engaged in the generation and supply of power. The agreement provided that A Limited will provide 1 lakh minutes of talk time to employee of B Limited in exchange for getting power equivalent to 20,000 units. You can see from the A Limited point of view, they are supplying what? They are supplying 1 lakh minute talk time. It means, can you say they are supplying their goods or services? So it is a question of what? Revenue recognition from the point of view of A Limited. Now as per Ind AS 115, whenever the transaction price is in the form of non-cash consideration, so transaction price will be measured based on the fair value of non-cash consideration received. If the fair value of non-cash consideration received cannot be measured reliably, then the second preference will be given to the standalone selling price of goods and services provided. So in this case, you can see A Limited normally charges 0.50 per minute and B Limited charges 2.5 per unit. So we need to find out the fair value of non-cash consideration received. So non-cash consideration received is the power equivalent to 20,000 units. What is the fair value? Fair value become 20,000 into what? 2.5, that is equal to 50,000. The fair value of non-cash consideration received will be 50,000. So in the books of A Limited, the transaction price will be measured at what? 50,000. This can be one possible multiple choice question. Correct? Come to point number 3. A Limited began construction of new building at an estimated cost of 7 lakh on 1st April 2001. To finance the construction of the building, it obtained a specific loan of 2 lakh from the financial institution at an interest rate of 9% per annum. From this, of course, we have understood it is a question of India's 23 borrowing cost. The company's other outstanding loan were 7 lakh 12%, 9 lakh 11%. So other outstanding loan means this become non-specific borrowing, and of course it is outstanding from the beginning. The expenditure incurred on the construction, they have given April 1 lakh 50,000, August 2 lakh, October 3 lakh 50,000, Jan 1 lakh. The construction building was completed by 31st Jan. So it started on which date? 1st April, 1st April, 31st Jan, means the capitalization period is how many months? It is a 10-month capitalization period. The construction of building started on 1st April 2001 and all the expenditure on construction of building had been incurred at the beginning of a respective month. Even though this is not given, means that the date of expenditure is not given, we'll always assume it has been incurred at the beginning of each month. Got this point? So of course, can I say first in this we need to first find out the capitalization rate for non-specific borrowing. But of course, they will ask you to find out the borrowing cost to be capitalized. So 7 lakh into 12%. So 7 lakh into 12%. It is outstanding for the entire 12 months. So it is become 84,000. Then 9 lakh into 11% become 99,000. So total borrowing cost for non-specific become 84 plus 99 is equal to 1,83,000. 1,83,000. Now we need to find out the capitalization that will divide by the weighted average borrowing fund, because the loan is outstanding for the entire 12 months. Therefore we'll do 7 lakh plus 9 lakh, that is 16 lakh. 16 lakh into 100 into 100. So 1,83,000 divided by 16 lakh is equal to coming, it is coming 11.4375%. 4375%. So this become what? Your capitalization rate. Correct? Now we can find out the borrowing cost to be capitalized. So you can see 1,50,000, 2 lakh. So out of this total, the total is what? You can see the total 1,50,000 plus 2 lakh plus 3,50,000 plus 1 lakh. The total is what? 8 lakh, na? 2, 3, 6, 7, 8 lakh. So it is coming 8 lakh. Okay, sir. Total is 8 lakh. So out of 8 lakh, 2 lakh is what? Specific borrowing. 2 lakh become the specific borrowing. So for this will be from specific borrowing, and out of 2 lakh, 50,000 will be from specific borrowing and 1,50,000 will be from non-specific borrowing. Correct? This 3 lakh will 50,000 will be entirely from non-specific borrowing, and this 1 lakh will be entirely from non-specific borrowing. Got this point? So can you say for the 2 lakh, what is for specific borrowing? The capitalization, the actual interest rate will be applicable. The actual interest rate was how much? It was 2 lakh 9%. So into 9% will do for how many months? 10 by 12. Correct? So 2 lakh into 9% into 10 divided by 12. It is coming how much? 15,000. So 15,000 will be capitalized for what? Specific borrowing. For specific borrowing. For non-specific borrowing, can you see? We'll take for these three. So first is 1,50,000. We'll take what? 11.4375 into what? For how many months? August. So we'll count from August, September, October, November, December, January, means 6 months. We'll do 6 by 12. It is coming how much? 1,50,000 into 11.4375% into what? 6 divided by 12. It's coming how much? 8578. Okay. Then 3,50,000 will take 3,50,000 into 11.4375%. So it is October. So October, November, December, January. 4 by 12. It will be 4 by 12. It is coming how much? 3,50,000 into 11.4375% into 4 divided by 12. It is coming how much? 13,343. So 13,344 you can say. Okay. Then Jan, it will be 1 lakh into 11.4375% into 1 by 12, because January, so January the last month, 1 by 12 for the capitalization period. So 1 lakh into 11.4375% into 1 divided by 12, it is coming 953. So 953. So what is the total? Total is coming 8578 plus 13,344 plus 953. It is coming 22,875. Coming 22,875. This can be the borrowing cost for non-specific borrowing. Only one doubt will come, sir. Why you have taken 2 lakh into 9% entire capitalization period? So for specific borrowing, will will capitalize the borrowing cost for the entire expenditure irrespective of month, for the means for the entire loan amount irrespective of the expenditure. Correct? 1,50,000 and then 2 lakh is even though incurred in the month of August, means out of 2,50,000 has been incurred from specific borrowing even in the month of August, but the capitalization will be done for the entire capitalization period for the specific borrowing. Understood? So there, here you can do mistake. So be careful about this point. Correct? Let's see now what other question they have asked. What is the value of shares of X Limited? Now they have asked the value of shares of X Limited, means entire shares. The entire shares was 5,000 into what? 168 we have already calculated. So 5,000 into 168, it is coming 8,40,000. The answer will be 8,40,000. So option number A is correct. Okay, sir. What is the fair value of A Limited investment in X Limited shares? Already we calculated, it is 250 they are holding into 168. So 250 into 168, it is coming 42,000. So answer become 42,000. Then by what amount the revenue be measured and recognized by A Limited in case of telecom segment? Already we calculated 50,000. So option number D is correct. Point number 4, what would be the capitalization rate for the computation of borrowing cost on the building based on general borrowing? So it is 11.4375%, already we calculated. What will be the total amount of borrowing cost in specific borrowing? Total amount of borrowing cost in specific borrowing. This also we calculated. Total amount of borrowing cost they have asked, but this should be total amount of borrowing cost to be capitalized. Total amount of borrowing cost to be capitalized, because if they are saying total amount of borrowing cost, the total amount of borrowing cost become how much? You can see the total amount of borrowing cost, because out of some borrowing cost will be capitalized and some borrowing cost will be charged to profit and loss account. So if that is the answer, if that is the question, the total amount of borrowing cost used to be 9 lakh into what? 9% means 81,000, but that option has not been given. That option has not, sorry, it was how much? 2 lakh. 2 lakh into 9% means how much? It become 18,000. Correct now. But 18,000, that option is not given. So you can understand that question is actually not correct. It should be what will be the total amount of borrowing cost to be capitalized. The answer is option number C, 15,000. And what will be the total amount of borrowing cost on general borrowing to be capitalized? That also we calculated. How much we calculated? 22,875. So 22,875. These are the answers. These are the answers. Got this point? Okay, if you see the options whatever has been given, so you can see option number A for 1, 42,000, 50,000, 11.4375%, 15,000, 22,875. So don't be confused with this particular point. What will be total amount of borrowing cost to be capitalized? It should be to be capitalized, and this will be also to be capitalized. Okay, borrowing cost to be capitalized. Okay, sir. Because of course there is a question of India's 23, so they will not ask you the total borrowing cost. They will always ask you the borrowing cost to be capitalized. So apply your common sense sometime in exam. Okay, sir. Now let us come to case scenario 2. D Limited is a globally diversified business conglomerate with operations spanning across various business sectors worldwide. The company adheres to Indian accounting standard for maintaining its financial record and annually release is financial statement. As the financial team progresses toward finalizing the financial statement for the fiscal year ending on 31st March 2002, the team is stuck up in accounting for the following transactions. Once again, this para is not at all relevant. Come to point number 1. D Limited for its dairy business purchased cattle at an auction of 30th June 2001. So of course, it is a question of India's 41 agriculture. Purchase price on 30th June 2001 is 1 lakh. Cost of transporting the cattle back to the entity farm is 1000. Sale price of the cattle at 31st March 2002 means year end is 1 lakh 10,000. The company would have to incur the similar transportation cost if it were to sell the cattle at an auction in addition to the auctioneer fee of 2% of sales price. Means the transportation cost is incurred both by buyer as well as seller. The auctioneer charges 2% of selling price from both the buyer as well as seller, and the auctioneer fee means the transaction cost is also incurred both by buyer and seller. So in this case, the transportation cost as well as the transaction cost both are incurred by buyer and seller. So if you see how much the payment has been done to purchase the cattle, it is 1 lakh purchase price, and the 1 lakh was paid for transportation, and 2% of auctioneer fee is also paid. The 2% of 1 lakh is 2000, that is also paid. The total payment become how much? 1 lakh 3000. But can you see this cattle as per India's 41 should be measured at fair value less cost to sell on initial recognition. Now fair value on 30th June will be 1 lakh only. Understood? But to find out fair value, will first minus transportation cost. So transportation cost will be deducted to find out the fair value. So fair value means what? Market price minus what? Transportation cost. This become fair value. So fair value become what? Actually 99,000. And from this will also deduct cost to sale. And cost to sale means transaction cost to incur to do that sale. Correct now. So that is also 2000. 2000 will be also deducted. So it will be initially measured at what? 97,000. 97,000. So 97,000 is the initial measurement, but the payment has been done 1 lakh 3,000. So can you say there is a loss on initial measurement? So loss on initial measurement become how much? 4,000. 4,000 becomes sorry, loss on initial measurement becomes 6,000. 6,000 become the loss on initial measurement. Correct. What they have said, calculate the amount at which the cattle to be recognized in the books of initial recognition at year end. So the corresponding journal entry. However, this is a question of multiple choice question. I will say they have taken this question from India's 41 study material resource and they have copy paste. However, this should not be asked here. We need to see what is the multiple choice question for this particular part. Okay, so we'll discuss. I will do this point. Point number 2, delimited as certain financial instrument irredeemable preference share with the face value of rupees 10 each and the premium of rupees 90. This shares carry a dividend at a rate of 8% per annum. However, dividend is paid only when delimited declare dividend on equity share. So it is irredeemable. Token is principal portion is irredeemable and dividend payment is also discretion because that is paid only on payment of equity shares. Therefore, can I say both component here, principal component, dividend component, there is no obligation to pay. So this will be classified as equity. This become totally equity instrument. Okay. Borrowing from J Limited for 10 lakh with settlement against issue of certain number of equity shares of D Limited whose value equals to 10 lakh. Fair value per share to determine the total number of equity shares to be issued to be determined based on the market price of the shares of D Limited at a future date upon settlement of the contract. So can you say because of this particular point the number of shares to be issued become variable number of equity shares. Whenever the number of shares to be issued or to be delivered is variable number of equity shares, then can is a principal portion will be classified as financial liability initially. Therefore, because it is borrowing to interest will be also compulsory यहाँ पर, so this will be entirely a financial liability. This will be classified as financial liability because here both principal component and interest component it will be what? Financial liability. Therefore, entire instrument will be classified as financial liability. Let's see what are the question given. First, come to question number 7. What will be the gain or loss on initial recognition of biological asset, that is cattle, at a time of purchase? Already we calculate loss of 6,000. So loss on initial recognition of biological asset 6,000. This is correct. Then what will be the gain or loss on remeasurement of biological asset, that is cattle, on 31st March? This we have not calculated. So you can see the question they have already given sale price of the cattle on 31st March 2002 is 1,10,000. It is 1,10,000. Correct. From this, once again, we'll deduct the transportation cost 1000, and we'll also deduct the auctioneer fee. So 1,10,000 into 2%, that is 2,200. So it is coming how much? 1,10,000 minus 1,000 minus 2,200. It is coming 1,06,800. And whatever the initial measurement was done at 97,000. So there is a gain on subsequent measurement. तो माइनस का तो 97,000, हाउ मच इंक्रीज हो गया? 9,800. So subsequent measurement is a gain of 9,800. Got this point? So you can see the gain on subsequent measurement, gain on remeasurement of biological asset is 9,800. This is correct. Option number A is correct. Chalega? Yes, sir. Then irredeemable preference share would be accounted as equity. Option number C is correct. Yes, sir. Borrowing from J Limited will be accounted as financial liability. Option number B is correct. Option number B is correct. Very simple, easy. Let us read the solution. What is given? You can see 7 loss is 6,000, 8 gain is 9,800. Option number C is equity. Option number B 10 is financial liability. This is also correct. Got this point? Come to the next question. Next case study. Case study number 3. Okay. H Limited is a globally diversified business conglomerate with operations spanning multiple business segments across various regions worldwide. For maintaining its financial record, the company follows Indian accounting standard. As finance team diligently finalizes the books of account and prepare the financial statement for the financial ending 31st March 2002, it requires insight and accounting suggestion on the following transactions. Once again, this para is not at all important. Correct? Then also I am reading the para to make sure that you also read, because sometimes some hidden information is given in the first para also. Point number 1. H Limited hold 12% of voting shares in Jet Limited. Jet Limited board comprises of 8 members, and 2 of these members are appointed by H Limited, casting significant influence. Each board member has one vote at the meeting. Correct now. So I think this is a question that whether it is an associate or it is not an associate. Even though can I say S Limited hold only 12%, it does not mean they cannot exercise significant influence. But our India's 28 says that if they are holding less than 20%, then also it can be presumed, means if the facts and circumstances uh, demonstrate that, then it can be assumed that they can, means it can be presumed that they exercise significant influence. And can I say from the board representation it can be understood that they have significant influence, because there are how many board members are there? 8. Out of that 8, 2 are from H Limited, so 2 by 8, and each board member can cast one vote, means 2 by 8 means how much percent is coming? 2 divided by 8, it is coming 25%. So it means they have more than what? 20% voting power. So it means they can exercise significant influence. Therefore, Jet Limited will become an associate of H Limited. Chalega? Yes, sir. Come to point number 2. H Limited hold 10% of the voting power of G Limited. The balance 90% voting power is held by 9 other investors, each holding 10%. The decision about the relevant activities, except decision about taking borrowing of G Limited, are taken by the member holding majority of voting power. Okay, majority of voting power. But you can see in this case, no investor is having the majority of voting rights. Okay. The decision about taking borrowing are required to be taken by unanimous consent of all the investors. Further, decision about taking borrowing are not a decision that most significantly affect the return of G Limited. One thing is clear, that this is the decision about borrowing is not a relevant activities. So relevant activities considered to determine the control. But can you say unanimous decision is taken to decide about the borrowing? And if I am saying unanimous decision means H Limited also need to be consulted, it indicate that H Limited has significant influence over what G Limited, and therefore G Limited become an associate of H Limited. Got this point? Yes, sir. Come to point number 3. H Limited is also engaged in the business of pharmaceutical. It has invested in the share capital of Y Limited and is holding 15% of Y Limited voting total voting power. Y Limited is engaged in the business of producing packing material for pharmaceutical entities. One of the incentives for H Limited to invest in Y Limited was the fact that Y Limited is engaged in the business of producing packing material which are also useful for H Limited. Since the last many years, almost 90% of the output of Y Limited is procured by H Limited. Means from this we can understand that Y Limited is totally dependent on H Limited for the sale of what? Producing, for the sale of packing material. It means there is some significant transaction between investor and investee, which indicate that H Limited has some significant influence over the business of what Y Limited, and therefore in this case also Y Limited become an associate of H Limited. So in all these three cases, the investee will become associate of investor. Okay, let's see what the options are given. What is the relationship of Z Limited with H Limited? So of course Z Limited is an associate of H Limited. It is correct. What is the relationship of G Limited with H Limited? This is also an associate. Correct. B is correct. What is the relationship of Y Limited? This is also an associate. Option number B will be correct. So in all cases 11, 12, 13, the investee are associate of investor. Let's see what are the options given. If you see, so 11, 12, 13, associate, 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 correct. Okay, sir. There are two more questions, multiple choice question. Come to question 14. With respect to the best practice applicable to all companies, which of the following statement is incorrect? We need to find out incorrect statement. Comply with the standard and the regulation, but also ensure that financial statements are an effective part of wider communication with stakeholder. Correct only. This is not wrong. Disclose complete information in the financial to avoid any further cross questioning in the mind of the user. This is also correct. Reduce generic disclosure and focus on the company's specific disclosures that explain how the company applies the policy. This is also correct. Do not disclose the assumption and basis. This is not correct, because as per Ind AS 1 and as per conceptual framework, we should disclose all the assumption and basis that that is that is used for the preparation of financial statement. So option number D is not correct. Means for this the correct means you need to tick option number D. Then which of the following proactive measures do not mitigate cyber securities risk? This is a question of accounting technology. Even though you have not read that particular chapter, but this type of MCQ question you can do if you apply your common sense. So which of the following proactive measures do not mitigate cyber security risk? Ensure that all the passwords are simple and are not changed regularly. Of course the password should not be simple, so I will say option number A is only correct. This is a common sense part. Correct. Now you read BCD. BCD will always mitigate the cyber security risk. Include procedure for detecting, containing, mitigating the impact of cyber attack. Okay. Ensure that firewalls and other security measures are in place to prevent unauthorized access to the network. Ensure that the data backup are performed regularly. So this, of course, this will mitigate cyber security risk. Only option number A, which will not mitigate the risk. Therefore, option number A will be the correct. Let's see what is the option given for 14 and 15. So 14, do not disclose multiple assumption. 15, ensure that all the passwords are simple. This will be the option which you need to choose. So you can see with this we completed all the case scenario multiple choice question. Got this point? Now let us start a discussion of part 2 descriptive question. Come to question number 1. Question number 1 is from business combination chapter. The concept is reverse acquisition. Same to same question we have done in the class. Most expected question also. Of course, I think no explanation required for this. Chalega? Yes, sir. Come to question number 2a. Question number 2a is nothing but the question is from financial instrument chapter, that is Ind AS 109. It is a question of loan given by parent company, concessional loan given by parent company to subsidiary company. In this case, first we need to find out the fair value loan, which will be calculated as present value of contractual cash inflow discounted at market rate of interest. That will be given the question. Means the fair value you can calculate. The difference between transaction price paid and the fair value loan will be accounted as deemed investment in the subsidiary company. The journal entry will become loan receivable account debit, investment in subsidiary company account debit to bank. Correct now. Similar corresponding journal entry we can do in the books of subsidiary company. So if you read the question what they have given, XYZ Limited is a company incorporated in India. It provides 10 lakh interest free loan to its wholly owned Indian subsidiary ABC Limited. There are no transaction costs. So the contractual rate of interest is 0%. State how the loan will be accounted for in the separate financial statement of XYZ Limited, means parent company. individual financial statement of ABC Limited means subsidiary company, and consolidated financial statement. In consolidated financial statement, the entire transaction will be eliminated. Got this point? The current market rate of interest for similar loan is 10% per annum for both holding and subsidiary company. So if you see the solution, so first we need to find out the fair value of loan. So it is, you can find out the fair value loan by using the market rate of interest. So you can see the market rate of interest is 10%. The discounting factor, you can find out the discounting factor will be the present value, you can calculate, that is 7,51,315 at a discount rate of 10% for 3 years, that you can find out the difference will be the deemed investment. 10 lakh minus 7,51,315, the difference will be deemed investment. So what we journal entry in the books of parent company: loan receivable account debit, investment in subsidiary company account debit to bank. Then can I say we'll calculate the amortized cost by applying ER, because in this question there is no transaction cost. ER will be equal to market rate of interest, that is 10%. You can calculate it. Very easy. Similar journal entry we can do, means the corresponding journal entry we can do in the books of subsidiary company. So the journal entry, bank account debit to loan payable to capital contribution from parent company. The difference will be capital contribution from parent company, and then interest expense will be accounted as we have done the interest income in the books of parent company. Got this point? Yes sir. I hope this is super easy question, but good question. Come to question number 2b. This is a question of related to India's 24 related party. A new question I will say, but simple question. One of the directors of Buildwell Limited, Mr. Ben Jones, has informed Central Finance team that on 1st Jan 2003, his spouse acquired a controlling interest in one of the Buildwell Limited major supplier, Candover Limited. Means what they have given? There is a Mr. Ben, who is the KMP director of Buildwell Limited, and his spouse, Miss close family member, has acquired a controlling interest in one of the company major supplier of Buildwell Limited, Miss Candover Limited, C Limited. C Limited. Now the question is that whether C Limited is a related party of B Limited. That is a question. So can I say, you can see that Mr. B is a related party which is identified in para 3a, para 9a. So KMP, to Mr. B is Mr. B and his spouse is already identified as a related party of B Limited, and now Mr. B close family member has acquired a controlling interest in C Limited. Therefore, can I say C Limited will be a related party of B Limited. C Limited means Candover Limited will be a related party of B Limited. Therefore, the transaction between will be required. The transaction between B Limited and C Limited require disclosure from the date of the existence of related party relationship. Got this point? What they have given? Then you can see Buildwell Limited has been purchasing goods from Candover Limited rupees 1.5 million per month of the year ended 31st March 2003. As per the financial statement of Buildwell Limited, these are significant amount. While checking all the purchase transactions, it was found that all the purchases from Candover Limited were made at normal market rate. Even though it is done at arm's length price, then also disclosure is required. How the effect of acquisition of controlling interest in the Candover Limited by Mr. Ben Jones is to be reflected. Mr. Ben Jones means controlling interest in Candover Limited by Mr. Ben Jones, not by the spouse of what? Mr. Ben Jones, is to be reflected in the financial statement for the year ended 31st March 2003. So can I say, because the relationship started from 1st Jan 2003, therefore the 3-month sales, 3-month purchase 3-month purchase required disclosure to 1.5 into 3, 4.5 million transaction require what disclosure. This will be the particular answer. Got this point? Yes sir. Then there is one more question, optional question has been given. An entity uses a weighted average cost formula to assign cost to the inventory and the cost of goods sold for the financial reporting purpose, but report provided to the chief operating decision maker, CODM, uses first in first out method for evaluating the performance of segment operation. State the cost formula to be used for Ind AS 108 disclosure purpose. This is a question of Ind AS 108. Similar question we have done in the class. In this case, for operating segment, means for disclosure purpose of Ind AS 108, will use FIFO method. But can you say the the operating segment information will not match with the financial statement information, therefore for that purpose reconciliation is required. Reconciliation required. So even though FIFO is used for evaluating the performance of segment operation, but we can use a different method for the preparation of financial statement. This is permissible, but for any differences a reconciliation is required. Got this point? Yes sir. Question number 3A is a question of cash flow statement, Miss India 7. Similar question is given in ICS study material. I think for this no explanation required. Same to same question is given in ICS study material. Then question number question number 3B is a question of India's 19. Same question we have done in the class. Same question is given in ICS resource. I think for this also discussion is not required. Correct. Question number 4 is a question of India's 12. Same question we have done in the class. Same question is given in ICS study material. Good question, expected question, can be asked in exam. So this is also does not require any explanation. Then question number 4B is also question of India's 105. This is a question of bill and hold arrangement. Same question have been asked in previous examination. Same question is given ICS study material. I think for this also discussion not required, but once again important question, expected question from examination point of view. 5A good question, similar question we have in India's 20, but I hope you might not have done this question. So if this question has been given in MTP, this now become an expected question. So must do question now this 5A. I will just read the question. ABC Limited is a government company and is a first time adopter of India's. As per the previous gap, the contribution received by ABC Limited from the government, which hold 100% shareholding in ABC Limited, which is in the nature of promoter contribution, have been recognized in capital reserve and treated as a part of shareholders fund in accordance with the provision of AS12. Now as per AS12 means as per previous gap AS12, if any government grant in the nature of promoter contribution, that we used to transfer directly to capital reserve. But now as per Ind AS 20, if any government grant in the nature of promoter contribution, then Ind AS 20 is silent, but there is one appendix given. They say that even though it is in the nature of promoter contribution, then also it will meet a definition of government grant and it should be transferred to profit and loss account on a systematic basis over the period, which will match the necessary expenses which they are intended to compensate. Means it will be transferred to profit and loss account as per Ind AS 20. State whether the accounting treatment of the grant in the nature of promoter contribution as per AS12 is also permitted under Ind AS 20. It is not permitted. Correct now. If not, then what will be the accounting treatment of such grant recognized in the capital reserve as per previous gap on the date of transition to Ind AS? Now what Ind AS 101 says that because this is the grant received, is grant given by government to a government company. So you can see the contribution received by ABC Limited from the government, which hold 100% shareholding in ABC Limited. So ABC Limited become government company. Correct now. So whatever amount has been received, it can be in the nature of equity. So if it is in the nature of equity, then capital reserve will be transferred to equity, means other equity in the specific heading. Correct now. So if it is in the nature of, if it the whatever amount has been transferred, if it is in the nature of as a equity participant, then the capital reserve will be reclassified to other equity in the specific heading. But if it is in the nature of promoter, if it is a grant in the nature of promoter contribution, then Ind AS 20 will be applied on retrospective basis. We need to apply Ind AS 20 on retrospective basis. This is given under Ind AS 101. Good question, similar question we have in Ind AS 20, same to same question we have under Ind AS 20 chapter, but because it has been now given in MTP, expected question from exam point of view, must do 5A. Chalega? Yes sir. 5B, same question we have in Ind AS 116. I have also given the same question in our expected list. So same question can be asked in the exam. I think explanation already given in our regular class. So for this I am not doing any explanation. Chalega? 6A, I will say most favorite question, have been asked many times in exam. This is a question of analysis of financial statement, also have been given by Ind AS 40 chapter done in the class. So I think for this also explanation is not required. 6B, it is a question of professional ethical duty. Same question is in ICS study material. Same to same copy pasted in mock test paper. Good question. You must do this question. I think explanation not required. If you have done the professional ethical duty, you know about the particular solution. Got this point? I think all the questions we have done. So as per descriptive question is concerned, There are very few question which is newly added question. Whatever question has been given, even though newly added means one question was newly added, that question can be done by you if you know the concept, correct? Case study questions all were good question we have discussed. So from my point of view, mock test paper has been done. I hope you have understood the mock test paper. We'll also come with the mock test paper series 2. Till then, bye bye, take care. Don't forget to share this video with your friend and like this video. Bye bye, all the best.